Well, let's go back to the subject directly. There are those in power who do not even agree that the Federal Reserve controls the money supply. In 1974, President Jimmy Carter said, "It is a myth that government itself can stop inflation." Excuse me, Jimmy baby, but you're wrong. The government itself, meaning the Congress, created the Federal Reserve. The Congress itself can revoke it. That means the government can stop inflation. But there's a reason that Jimmy doesn't believe the government causes inflation. He appointed Alfred E. Kahn as an advisor on inflation, and this is what Mr. Kahn's view on what caused it. The desire of each group with power to improve its economic situation is, after all, what the problem of inflation is. The living standard of Americans must decline if inflation is to be controlled. Now, the only thing that Kahn didn't say was that he would urge the Federal Reserve to continue its vision of debauching the currency to reduce America's standard of living. There are many historians who think that President Carter was the worst president the United States has ever had, and I count myself as one of them. And this cartoon amply illustrates the point. The lady tells the seated president at the "Who's the Worst President Ever" contest television show. The lady tells the president, Mr. Carter, there's been a mistake. When we asked you onto the show, we didn't mean as a judge. But we have had warnings from the past not to create a Federal Reserve system. As I've already mentioned, the Bible in Proverbs 22 verse 7 says this: the borrower is servant to the lender. Of course, those words do not apply to us as Americans. They only apply to the house of Israel, written many, many centuries ago. Reginald McKenna, a past chairman of the Board of Midlands Bank of England, warned us with these words around 1900. I am afraid that the ordinary citizen will not like to be told that the banks can and do create and destroy money, and they who control the credit of a nation direct the policy of governments and hold in the hollow of their hands the destiny of the people. President Thomas Jefferson warned us as well. I sincerely believe that banking establishments are more dangerous than standing armies, and that the principle of spending money to be paid by posterity, which means, of course, the future, is but swindling futurity, and once again, the future on a large scale. It is incumbent on every generation to pay its own debts as it goes, a principle which, if acted upon, would save 1/2 of the wars of the world. Now, this is an extremely important quotation. President Jefferson was telling us that bankers create wars which are very costly, and that they can get government to borrow the money from the bankers to finance them. And then the bankers can loan the money to the government at interest, which means they can create money out of nothing and make a profit on the money that they've created. President Abraham Lincoln also warned us about what he called the money power. The money power preys upon a nation in times of peace and conspires against it in times of adversity. The money power will endeavor to work upon the people until the wealth is aggregated in a few hands and the republic is destroyed. Sir Josiah Stamp, a past president of the Bank of England, said this: if you want to remain the slaves of the people and to pay the cost of your own slavery, let them continue to create money and control the nation's credit. President James Garfield was quoted as saying, "Whoever controls the volume of money in any country is absolute master of all industry and commerce." And to bring it a little closer to the present, I would like to quote President Franklin Roosevelt. "The real truth is that a financial element has owned the government ever since President Andrew Jackson," meaning this financial element has owned the government since around 1830. But to show you that all of these warnings are wrong, some do not agree. Like this gentleman, William Gladstone, the Chancellor of the Exchequer in England, the controller of England's treasury, who said this: "The hinge of the whole situation was this. The government itself was not to be a power in matters of finance, but was to leave the money power supreme and unquestioned." So this is the battle. Who is going to handle the money supply? The government or the bankers? A similar threat was voiced by Alexander Hamilton, America's first Secretary of the Treasury. He offered an opinion as to who we should trust with the money power. "No society could succeed which did not unite the interest and credit of rich individuals with those of the state. All communities divide themselves into the few and the many. The first are rich and well-born. The other are the mass of the people. The people are turbulent and changing. They seldom judge or determine right." So, people of America, we're not well-born, and therefore we must trust the rich, because they can best administer the quantity of money through a central bank. Now let me bring this all together with the discussion of how this financial element creates money out of nothing. Now I would like to bring the thoughts of Dr. Quigley back once again for a very important observation. We have asked the question as to who is to control the money supply, the bankers or the government. Dr. Quigley spoke directly to that issue on page 53 of his book entitled Tragedy and Hope. This is what he wrote: "The influence of financial capitalism and the international bankers was based upon the assumption that the politicians were too weak and too subject to temporary popular pressures to be trusted with control of the money. Accordingly, the soundness of money must be protected by allowing the bankers to control the supply of money." Now what follows is a very devastating bit of information. Dr. Quigley continued, "To do this, meaning allow the bankers to control the money supply, it was necessary to conceal or even to mislead both governments and people about the nature of money." Let me repeat those last few words. It was necessary to conceal or even to mislead both governments and people about the nature of money. You might remember that I drew this conclusion near the beginning of this presentation after we defined the word inflation. There it is. I said one of these definitions is in error because someone is not telling the truth. Dr. Quigley just taught us that it is the bankers who are lying to us about money. In other words, we are not to be trusted with the truth, as I've detailed it in this presentation. Let me conclude this thought with this one sentence. We are being lied to by the international bankers who are lying to conceal their crimes against us. and I've tried to document that fact for all to see. This will be a brief, simplified illustration, hopefully just to keep it easy to understand. There are three principles in this illustration: the President of the United States, the Federal Reserve, and the Treasury Department. The process starts when the President requests that each of the departments of the government submit their budget for the next fiscal year. And let's just say that it totals in round figures $4 trillion. He then asks the Internal Revenue Service to submit an estimate of the amount of taxes to be collected during the next fiscal year, and let's say that totals $3 trillion. That means there will be a deficit of $1 trillion. Now let's just assume the President doesn't know what to do. He goes to one of his advisors and tells him who advises him, the advisor advises him to call the Federal Reserve, and they will get the money that he needs to balance the budget. So the President calls the Federal Reserve and asks them for $1 trillion. The Federal Reserve responds that they will be happy to get him the money. The President authorizes the process. The Federal Reserve then calls the Treasury Department and asks them to print up $1 trillion in small denomination bills. Notice here that this money is being created out of nothing. The bank is not loaning part of their assets. They're creating $1 trillion of new money. The Treasury then calls the Federal Reserve when the money is ready. The Federal Reserve then calls the President and tells him the money is ready. The President then tells them to deliver it, and they will deposit it into the federal government's account in the Federal Reserve. The Federal Reserve then says they want some evidence of the transfer of the money, since they are loaning the money to the government. And the President says, wait a minute, what's this about loaning? You're the Federal Reserve, and I'm the federal government, and you're the Federal Reserve, meaning you're a branch of the government. I'm the President, and I need $1 trillion to balance the budget, and I'm told you can arrange for me to get that amount. And so the Federal Reserve responds by saying, you're slightly misinformed there, Mr. President. The name Federal Reserve is not our entire name. We are called the Federal Reserve Bank. And even though we have the name Federal in our name, we're not a part of the federal government. We are a privately owned bank, and just like any bank, we are in the loaning business, and that we will need the government to pay the loan back with an annual rate of interest. And we will loan you that money, let's say in this example, for 10% interest per year. And the reason we need to charge interest is because we're a bank, and just like any bank, we have bills to pay. The President responds that I guess this is the way it's done, so what do I tell the Treasury Department? And the Federal Reserve responds, tell them to print up $1 trillion worth of bonds at an annual rate of 10%. So the President calls the Treasury Department and asks them to print up bonds at a 10% annual interest rate. The Treasury Department calls the President when the bonds are ready. And the President then calls the Federal Reserve and tells them the bonds are ready. The Federal Reserve tells the President to have the bonds delivered, and in exchange they will deliver the money to him. And the next day, the trucks with their cargoes pass on the highway, and when they get to their destination, they make the delivery, and everybody's happy. The government now has the money to pay all of their government bills, and the Federal Reserve now has a guarantee that the federal government will pay the interest on the bonds so that they can pay their bills. Now let me point out in my example, the amount of money borrowed was $1 trillion, and the amount of interest to be paid is $100 billion, meaning an interest rate of 10%. And oh yes, I failed to mention that bonds are issued for a certain period of years, which means that the government will pay $100 billion a year for, let's say, 20 years. That means the total interest paid will be $2 trillion during the 20-year term. Now I've got to explain that paying interest on bonds is not like paying interest on a mortgage.